Hi everyone.
Hi.
Oi, oi.
Hi Steve, Ben, Ken. Nice to have you back. Roger's joining us. Rogers.
Hello, Roger. Was good. Was good.
Hi Roger. No, I think his audio is still connecting.
Press the dial in button if you don't know what to do, just in case.
I don't know. Maybe we should chat with him.
Call dial in.
No, I think he may not be able to hear us because his audio is not yet connected.
Yeah. Okay.
Okay. Arsen is getting his coffee. Alright.
Anybody have a cold shower right now? Today?
Why? What happened? Oh, PJ Bell. Okay. All right. All right.
Got a new one?
Yes, that's Patrick.
PJ?
PJ. Yes.
Hey, how's it going?
Hi, Patrick. Welcome.
Thank you for having me.
Everyone's welcome here. The more, the better.
First American in the Zoom.
Really? Yeah. True.
Now I feel special.
Right. All right. Okay. Put my phone away and okay. Right. Let's just give it a couple of more minutes. In the meanwhile, Roger's here for the first time, I believe. Oh, Roger can't hear us still. Roger, let me. Okay, Daniel's here as well. Wow, that's nice. This is. Let's see, would today beat the record? Hi, Daniel. Hi, Daniel.
How are you guys?
Good, great. Nice to have you on.
Good.
Right. Give me a moment. Let me just. Are you chatting with? Is anyone chatting with Roger?
No,
No.
not me.
All right. Let me just chat with Roger. Hi, Roger. I think you're. On.
Yes, hello.
Roger. Oh, all right. Roger, can you hear us? Excellent.
Yes, no, I'm sorry. I have a problem with my computer. Now I'm can hear you now.
No worries. We've been waiting for you to join the audio, so we could all. Yeah.
Okay.
Okay.
Sorry for that. Thank you.
No worries. There's always a first, and there's always troubles to fix. And
Yeah.
the best opportunities are when you have trouble to fix.
Okay, that's good.
Because Kiyosaki always says, I mean, in most of his books, he says you have to learn to fix problems. You have to find out ways to fix problems, and then that would bring you opportunities and money.
That's correct.
The more problems you fix, the more money you make. The bigger the problem, the more the money.
Absolutely, that's correct.
All right. Okay. Let's see. That's 1, 2, 3, 4, 5, 6, 7 of us here. And hey, Ben, it looks like this time you're getting kicked out of the game.
I'll play my own game then.
Actually, I don't mind to be out of the game because I will need to leave before the end of the meeting. So
Is that so?
it's okay.
I was just pulling Ben's leg because one of the earlier when we had 7 players, 7 members in the chat, we asked Ben to stay out of the game because
Oh, I remember that.
yeah, you were there.
I remember. Once again, Ben.
Yeah.
Poor Ben.
I don't need you guys.
All right.
So
Okay, ground rules. Let's say Roger is here for the first time, or last time was he here? No, Roger's here for the first time.
Yeah, hello everybody. It's my first time.
First time, all right. And so is Patrick. So ground rules, you need a sheet of paper. You need a pencil or a pen, whatever works for you. And you need a calculator, the bigger the better. All right, because what we do over here is quite a practical way of looking at things. We all play the game so that we learn something. And we know that the game has been built on a lot of principles from the real market, a lot of principles which Robert Kiyosaki, he outlines in his books. And what we are trying to do here in these meetings is to connect the game with the real market and connect the game with the books. So finally, we get to know what is in the books and what is in the real market, and how the game, when every time we play the game, how it looks real to us. Excuse me. How it looks real to us. How when everybody else is playing by luck, we can play it with control. How we can play it with calculation, with analysis, with understanding. So that's what we're trying to do. So every one of us, we pitch in, and let's get logged into. Hey, I remembered Ersin is supposed to join us today. He's gone to get his coffee. So that would still make us a record attendance today with our
8. Will it be 8 people now?
We're going to be 8 people, I think. Let's see, where is Ersin? Ersin, coffee takes too long for you. Get a coffee machine, man. Let me put that in here. Waiting for you.
I get one of those K cups.
All right. All
What
right.
did you say, PJ?
Sorry?
Saying you got to get one of those Keurigs and use those K cups.
All right.
Okay. In the meanwhile, okay, let's get logged into our game. Okay, so I think Daniel won't be logging into the game, but the rest of us, let's get logged into the game.
correct.
All right, admit, and that is who now? Dust Starter. I forgot who this guy was. Dust Starter. Let's see, is audio connected? Hi. Okay, Dust Starter. I forgot your real name. So
My name is Sansi.
Sanchit. Okay, Sanchit, can you rename yourself, please, for the sake of this meeting? All right, it helps. Welcome back.
Thank you.
We're already 8, guys. It's actually interesting, very thrilling how this Zoom meeting has also grown from
Lovely thing.
Yeah, Ben.
It's a lovely thing to see.
Yes. I mean, there have been times when Ben and me were the only people out here. Then there was a time when Shivam and me were the only people out here. But then look at today. Wow.
Yeah, this is a great example of start small and keep growing and don't give up.
Absolutely.
Yeah.
I only wish we could see more people rather than just talk with people, because it helps to understand what the other person has actually understood, or to to know whether we are communicating well or not.
We like hiding. Just let us be, man.
I know.
Now we're coming on
I'm
soon.
hiding, Ben. I know, because you just woke up, didn't you?
Yep. How did you know?
Same old story.
Oh man.
All right. Okay. Let's see. Ersin is still away. Okay. I think, have you all logged in to?
I see a Russian game in the room. That's cool.
What's the name of the room we should be looking for?
Okay, we
It'll
haven't
be cash.
the room yet, but we normally name it cash flow.
Gotcha. Okay.
But just hold on. So we'll see if Ben can join. Then, I mean, if Ersin can join as well. And one of the yes, he is here. He's here. Yoo-hoo! It's a record.
Keep beating it every single Saturday. Lovely, man. It's good. This is good.
Wonderful.
Hello.
Welcome. Now look at it. Now with you, we have a full matrix. I can see 3 by 3 by 3. Nice.
Ersin, you got the coffee? Where's your coffee, man?
What?
Ersin, your coffee, where is it?
In the coffee machine right now.
Have you eaten your egg mac?
Let me. What?
Do you have egg mac for breakfast?
I got a toast and an egg. But what's the point of my breakfast?
I still haven't eaten
Looking
yet.
for ideas. He just woke up,
Yeah. I just finished my ice shower, so that was really nice.
All right. Okay. Now that Ersin is also here, let's decide who's going to get into the game. I can stay out, and Daniel has already volunteered to stay out. So I think we can ask the others to get into the game. Let's see. Ersin, what do you think? You want to be in or out?
Doesn't matter for me.
I think for the people for those of us who've been regulars or from the start, from the beginning in the video chat, I think we should stay out and let the others play. What do you think?
It's reasonable.
Regulars out, new ones in.
Yes.
Exactly. So that's what I thought.
Cool.
All right.
I'm out.
That's 1 through 3. You should stay out.
Shush.
All right. Steve, this time, would you start the game? Would you
Sure.
open the room? Okay, everybody, have you logged in to your Rich Dad Cashflow Classic?
Yes.
Yeah, I'm logged in.
All right.
Yes.
Okay, I'm starting the game now.
All right, cash flow is on, and let's see. Can you see everybody in? Or do we have other people from outside the game, Steve?
Yeah, possibly, yeah.
Okay, then we have to
Uh,
wait it out. Who's not in? Okay, Steve, Ken, Roger, Patrick, and Sanchit. You're the guys who should be in the game.
I'm in the game.
Sanchit is in.
In the game. I'm in the game.
Okay,
Sanchit is in
Steve
the
is
game.
already in. Roger,
Yes, me too.
you're in the game. Okay, all right. So that's 3. Ken,
Yes.
are you in the game?
Yes, I'm in the game.
You're in the game. And Patrick,
Yeah, I'm in the game.
you're in the game. Okay, all right. So that's 1, 2, 3, 4, 5. Only 5. Huh? Okay, all right. So the last person, who is the last guy? Steve, can you identify the last guy?
Florin is.
Okay, so maybe we'd have to wait for him to leave, and then I think one of us can join.
Do you remember last time someone was right to leave the game for
I know
a player?
that is so rude. I'm rude. Who was that? I think Ben did that. Did Ben do that? All right. Okay, he is not responding anyway. So
Okay, we've got a space open.
okay, all right. Okay, I'm gonna join that spot. I'll take that spot.
Okay.
Okay, cash flow 5, 6. Okay, join. Okay, all right. Okay, all right. Right. Okay. Share screen. Go ahead, Steve.
Okay.
All right. Here we go.
Make this bigger.
Please do zoom in. Some of us are old.
That's okay.
You
That's
can-
good.
Yeah, you can do one more. All right. Yeah, that should be okay.
Okay. So my business manager.
All right. Steve,
Yeah.
you want to run through your financial statement first? All right. You can explain. I mean, you can just what you see. So
Okay.
the those of us.
I'm a business manager. I have a current cash flow of 4,600. My expenses are 2,870. So I've got a payday of 1,730.
Right. Do you want to explain about your liabilities, current liabilities as well?
The expenses, sure. Yeah, so a home mortgage, car loans, credit cards, and retail debt. So they are generally, or we can see the amounts which add up to the total expenses. So they are less, the amount is less than what we can acquire finance in the game for, which is 10%, the finance.
Correction. It's not the amount, it is the rate of interest that is less.
Yes, that's what I mean.
Okay.
Sorry, yeah.
It's okay.
Yeah, if that wasn't clear. Okay, so I'm gonna go ahead and get started.
All right.
Okay, coffee machine for Erson.
Coffee machine person, yes. All right. Okay, I go next and I share screen. There you go. All right. So I'm an engineer. My starting salary is 4,900. So that means my every payday I get 4,900. I have 400 in savings. So let's see, look at my financial statement. Okay, let me mute my music. There we go. All right. So look at my expenses as well. So if I have a total income of 4,900, I have a total expenses of 3,150. Now 3,150 is most of these, okay, other expenses of 1,090. Now these are expenses which don't go away, and mostly in the game it should represent your food and your regular routine expenses like your petrol, or your gasoline, transportation expenses. So those kind of things, those regular things which you can't sum up to. All right, my home mortgage. Okay, all right. Patrick went out of the room. It's coming back. Okay. So, Steve, do you remember what your home mortgage was? Can you check?
Sure. Okay, my home mortgage is 75,000, of which I'm paying 700. Yeah. So
75,700. And what was
Yeah.
your salary? What is your monthly income?
It was 4,600.
4,600. Okay, mine is 4,900. Now this is something interesting as well, because Steve has a salary of 4,600 and I have a salary of 4,900, and our home mortgages are almost exactly the same. This should tell us something about, this should reflect on the fact that we've been thinking, and those of you who have just freshly joined, I mean joined us only in this session, if you go back to some of the old videos, you will notice that we spoke about neighborhoods, residential neighborhoods. So if you look at residential property, you are looking at real estate, you look at residential property, and there are, if you look at real estate in general, there are zones, and there's a commercial zone, there's a residential zone, and there's mixed use property, there are industrial zones. So property or real estate is divided into different kinds of zones, and depending on the zone that you are in, your valuation, your lowest cost, or your lowest value and your highest value, and the flexibility, the volatility of the valuation. All this can vary, and this can be predicted, and you can see the trends based on the zones that you are in. And also in the game there are some cards which says some market cards which says you have a rezoning. You talk about rezoning the property, the land, especially when it comes to the offer on the 20 acres deal. You don't see that very often. It's not very common. The market card itself is not very common. But when you see the market card, you will notice that there is a word called rezoning. So the buyer is taking the responsibility of rezoning. In the small deals also, there is a similar card which talks about the 10 acres of land which they want to make into a park. And I think even over there it talks about rezoning, but I'm not very sure of that. All right. So we are, okay, I choose my dream. Okay, and normally I choose a different one, but this time I clicked something and it is, all right, expense, nothing new there. All right, Ken, can you share screen, please? There we go. All right, zoom up. Let's see, Patrick, can you hear us, Patrick?
Yeah, I'm still here.
Okay, you keep.
Yeah, I'm switching over. I have my I was in the Zoom meeting on my mobile phone, but I'm gonna need to share my screen. Probably need a little more real estate. Switching over to my desktop.
All right. Okay. All right. That's fine. I just was wondering because you were alternating between in and out.
There's probably two of me in the chat right now.
Okay. All right. That's fine. Perfectly all right. All right. Ken, we're seeing your screen. Airline pilot. Have a good look at your salary, and compare again with your compare your expenses with your we've just taken the benchmark as the home mortgage. Now you see my home mortgage was 75,000. Steve was 75,000. You have 143,000, which is almost twice as much. And twice as much. Also look at the salary. Your salary is twice as much, 9,500. So this, why I focused on the salaries and the home mortgages today is because this is something that we have not done before. And we have to realize that if you have a higher salary, it does not mean you are financially free. It does not mean you are rich, or it does not mean you are wealthy. It just means you can afford more things, and you will eventually start spending more, and your expenses would just pile up just as much as what would be affordable to a person with a smaller salary. So the point here is that I think I discussed this yesterday in one of the games as well. The point here is that we have to learn to be financially free, or generate passive income beyond our salary, or not considering, or considering that we have no salary at all, that we have zero income. We have zero income, or we have zero payday, or even negative payday. That's a different thing that we will come to that in a little while. But the point here to notice is that It is not the salary or it is not our employment that makes us wealthy. And here we do make a distinction between the words rich and wealthy. You become rich if you win the lottery, you get a lot of money. But if you want to keep it that way, you have to learn to be wealthy, which means you have to be able to generate the same amount of income every payday without you being involved, or even if you are not involved in your payday. This is what exactly happens in the fast track. So even if you go through a divorce, you could lose the money that you have, but you would generate the same amount of income on a payday with on a cash flow day without your involvement, regardless of whether you do a deal, you don't do a deal, whatever happens, you generate that kind of income. Whereas if you are a salaried person, if you are an employed person, and you go into unless you are spending your own time, unless you are sharing the benefit of your time with your employer, you are not paid. And there was Kiyosaki also mentions this in one of his books, I forgot which one, but it is possible to be rich in every quadrant. It is not only in the B and the I that you would be rich. You could be rich in any quadrant. However, you can only be wealthy in the B and the I. So the whole point is to learn how to convert riches into wealth, if we can manage to do that, or if that is what we expect to achieve through financial education. All right, quick update. I think we're running out of time on this meeting. So just for the benefit of those who have joined us for the first time, this is a free session of Zoom, so it only lasts for 40 minutes. So every time we will normally do 3 sessions in every weekend meeting, and whenever the meeting ends, we don't close the game. Just the Zoom meeting will end, and we will rejoin the same meeting and continue for the next 2 more sessions. I hope that's fine with everybody. Ken, let's go.
I'm going to roll now.
Right, let's see what you got. All right, music CDs. Now, coffee and music would be very good. All right, Patrick, could you share screen with us, please?
Sure. Apparently some of my privacy settings are prohibiting that. Give me 1 second.
Okay, all right.
Okay, I'm back. Sorry about that.
All right.
Okay. All right.
All right. All
So,
right, engineer as well. So
yeah, I'm also an engineer. Cash flow of $4,900 a month. Monthly expenses are $3,150.
Right.
You know, what I'm left with at the end of, you know, every pay period, I imagine, is $1,750.
Right.
I don't currently have any assets. Liabilities include my mortgage, $75,000, $7,000 worth of car loans,
Right.
$4,000 worth of credit cards, and $1,000 of retail debt.
Right. Since you're noticing these, do you want to do a quick calculation on what interest rate you are getting your, let's say, retail debt?
Retail debt. Okay. So $50 I'm paying every month. Yeah, you know what? I'm not 100% sure how I would even calculate that.
All right. Okay. So this is exactly what we try and figure out here. We try to, okay, before we go in there, how many minutes do we have left?
3.
All right. So quickly, what we do here is we try to, we base our whole discussion on a couple of things. One is market research. Now, about market research, when it comes to property, it normally, I mean, if you went out to the real world and you wanted to do market research on property, on real estate, what you would do is you would look at how has been the pricing, how have been the transaction, the value of the transactions that have happened for a particular class of assets, for a particular kind of asset in the last 20 years. Now, 20 years is a good, there's a recommended video on the club. I think we will post that. We've been discussing that on the club now just yesterday and today. But, and thanks to you, because you're the reason why we're doing that. But once that is posted, you would also be able to see that video and and figure out how this works. But we follow trends, and these trends happen. I mean, the best way to view a trend is to look at it over 20 years. And if you wanted real estate trends, you have to look at a particular asset, kind of asset, over the last 20 years. What have been the fluctuations? What have been the ups and downs of the pricing, of the valuation of that particular property or that particular kind of property? And this would help you realize whether the current trend is favorable to you or not. It is a good time to make a deal to buy, or make a deal to sell. So this would be the best way to decide whether it is the right moment or not. This is number one, market research. In this case, this is number one. Number two, if you were looking at retail payments, or if you were looking at credit card payments, you would have to know what happens in the in real life. You would have to figure out, or you would have to talk to people. If you don't, some of us are students, so probably don't have a credit card, so probably don't have retail debt, or car loan payments. So you will have to figure out what are the terms that you normally have in real life. So this would help us figure out how the EMI, or the monthly payments, are equated. And this would help us understand, okay, this is less than 1 minute, so we would be cut off any moment. But this is, you have to learn, and you have to understand, you have to collect information from the real market over a period of time, so that we can put together this information, connect it to what is happening in the game, and understand the background of the game.
Got it.
All right. So since we have less than 1 minute, I suggest we'll not go into a new topic. We will just hold it right where it is, and we will rejoin using the same link into the same meeting. Okay, everybody in? Everybody clear? Can listen? Audio connect?
Yes, I can.
All right, Ken and Ben, I'm still waiting for your audio to be connected. Ben. Ben can't hear us. Right. Okay. All right. Yes, everybody is back in and audio connected. So I guess everybody can hear everybody else if required. I think Steve's got a blender running over there.
Outside.
No problem. No problem. Okay. All right. Patrick, so let's roll. Okay. Pick a, okay. Nice dream. Fishing cabin. Okay. Go ahead, roll. And okay, all right. Expense.
There you go. Birthday in the woods.
Yeah. But this was, yeah. All right. Okay. Who goes next?
Roger.
Me.
All
Okay.
right.
Let me share my
Screen. Yes. Go ahead. Okay. Business manager. I think the same profile as Steve.
Yes.
Yes. 75,000 home mortgage. Did you notice the payday is almost the same for between Steve? What is your payday?
I believe it's the same. Let me just check. Yes, it is.
As I say, I mean, this is not just a convenient thing to do in the game. It is also a reality, because that's the reason why you see. I think Jesse from our club mentioned that if you look at the kind of people that you spend your time with, then you would realize that you're all it's all like birds of the same feather flock together kind of thing. You would all be sharing the community, the time, the 5 people that you spend your most spend the most of your time with. Those 5 people will decide how big you would grow, or how well you would grow. And most of the time we notice that the amount of money that we earn, or the amount of expenses that we can handle, invariably indicates the kind of circle, the social circle, the financial socio-economic circle that we participate in. So if we make a lot of money, then we hang out with people who make a lot of money. If we make a little less money, I mean, if we make much less money, then we just hang out with people who make just the same amount of money, or almost the same amount of money. This is one of the this is one of the observations that's repeatedly being made. So one of the things that is important for us to do as people who want to be financially free, or people who want to generate passive income, is to, just like how Robert Kiyosaki moved from the concepts of his poor dad to the concepts of his rich dad, the same way we also need to identify now what we are as a club is mostly, I mean, even if you notice the interactions on the club, the most of the time, some people always interact, some people don't interact at all, some people occasionally interact. All this is based on the level of exposure that we get, the number of people, the kind of people that we meet, the kind of discussions that we have, how confident we are about what we are financially. This is a hard fact. This is a difficult fact as well, because it is not a pleasant thing. It is sometimes a very disturbing thing that we don't feel confident to step up. We don't feel confident to I believe, and I've tried this on the club as well. I have asked why people don't interact. Is it because of the language barrier? Because definitely there are language barriers, but there are other barriers as well. And one of those barriers is the fact that we are afraid many times to feel to appear foolish. The reason why we don't speak up, or the reason why we don't make a suggestion, is we are apprehensive. We are worried whether is that would I be excuse me, would I be considered stupid or foolish, or may I make a mistake? Would I go wrong? All these questions are the constant fear that plays in our mind. Whereas if we are with our best friends, if we are with our closest people, we don't feel the same. We talk, we speak about everything under the sun, and we are not afraid of going wrong, because they already know what we are, or so we think. We consider that they already know what we are. Whereas on the other hand, on a group like our cash flow club, many people, many different nationalities, many unknown people, and then suddenly I feel worried that would I make a mistake? Would I appear foolish? Would I appear below everyone else? Would I appear not at par, not at the same level with everybody else? This is one of the most critical, or the most difficult things that hold us back in our financial education. I've in one of my ventures, I worked very closely with Japanese people. And one of the most interesting, or one of the most pleasing or appealing thing about the people that I've interacted with in the Japanese culture, who follow the Japanese culture, is that they want to know until they are satisfied that they know sufficiently enough. Whenever we pitch a project to them, whenever we pitch a solution to them, and I have interacted mostly in the capacity of IT infrastructure, and most of the people that I interact with are not IT aware, but still they believe that I can explain to them in a simple way, in simple terms, in terms that they would understand. And they are inquisitive. They keep asking until they are confident that they've understood. I have not found that very often with many other nationalities that I've interacted with. And this is something that I've learned, because there's this quote that I love very much. It says, I don't remember who said that. I think we discussed this on the club as well sometime back. I never lose. I never lose. I either win or I learn. I never lose. Either I win or I learn. So if you learn, you could never lose. So this is something that we need to keep in mind. whenever we see something interesting happening, whenever there is something that we see somebody above us, or somebody more skilled than us, more talented than us, or more, let's say, financially independent than us, or financially more successful than us, whenever they do something, we need to take the risk of appearing stupid, but asking the questions, the right questions, so we would learn something from them. It is at the risk of looking stupid. It is at the risk of being ridiculed. I mean, they might actually, if they are a happy person, they would want to share something with you. This would be this would be a very good opportunity. But if they do not want to share something with you, they would probably ridicule. They would probably say, they would probably make fun of you, or they would probably make us look stupid. And this could probably happen in a public audience. But the point is, what has always, this is my personal feeling, and what has always driven me is one single thing: who pays my bills? If you don't pay my bill, then I really don't care what you think about me, as long as I can learn something from the situation. All right. That was okay. I went off on a tangent over there, but then I think that was important for us to know that our vibe decides our tribe. That's one of those nice lines that I've heard somewhere. Our vibe decides our tribe. So if you feel like it, if you think, if you believe that you can do it, then you will find people who are around you, who will actually support you to do that. Roger, let's get it moving.
Okay, let me choose. Okay.
Right. Let me see. Okay, hold on. Okay, hold on.
Okay.
Right, Sanchit is send the link. Yes. Okay, great. Roger, we normally what we do is we don't play the small deals here. The reason why we don't play the small deals is because most of the small deals, okay, not talking about the real estate deals, the property deals, but most of the other deals like the stocks, the certificate of deposit, all these do not help us in any way. They don't add any value for us to discuss and do something of what we are trying to do. I mean, if you're looking at passive income, most of the small deals have a very small passive income. Or zero passive income, especially stocks and certificate of deposit. Certificate of deposit, at least there is some kind of cash flow, but everything else, I mean, stocks don't give us any passive income. Most of the other property deals also, it's those are simple deals. The idea over here is that we spend our time to learn more about how to play with leverage, how to use leverage. And leverage is one of the most important things that Robert Kiyosaki always highlights, because if we that's the difference between the rich and the wealthy as well. The rich, if you are rich, you have money, but money itself is something that is losing value because of various factors. And number one in that is inflation. So if you have $1 today and you are saving that $1, if you are holding that $1, not spending it, tomorrow that $1 is not going to buy you the same same things that the Urson is laughing. I know. Urson. Okay, Urson, why don't you share about inflation?
Okay, in my country, there's around 20% inflation. I was having 100 liras while I was just starting 100 liras per week while I was just starting the university. It was 10 years ago.
Okay,
And
Ersin, I think you need to explain that lira is the currency of Turkey. Ersin is from
yes,
Turkey.
yes. Lira is currency of Turkey. So 100 lira was about $40 at that time, but now it's around $10. And I was able to spend all week with 100 Turkish liras at that time, but in this time I will not go out without at least 300 or 400 liras, because if I'm hungry, I need to pay at least 50 liras. So with 100 lira, I couldn't get back to home. So this is what inflation makes to our money. When you collect your money, let's say I did save too much in that time as liras, and what I can do with that liras right now, it's almost nothing. So saving currency is not a good thing. I'm not going to say stupidity, because I think there's always someone making it. But please don't save it.
Okay, so thank you, Ersin.
Problem.
We need to look at a few things when it comes to saving money. So just like Ersin said, 100 lira when he was going to the university would be sufficient in those days, but because of inflation, today in the same place of 100 lira, he needs 400 lira or 500 lira.
But
what has happened?
Please remind that too. I was spending 100 lira for a week, not a day.
Oh.
All right. Okay, now you're spending 500 lira a day.
Yes.
If you just go out on a weekend, probably.
Yes, yes.
All right. Okay, so that should explain how much the lira has lost its purchasing power. Because with 100 liras, if he could purchase the expenses for a whole week, and now for just the weekend he needs 500 lira, that means 100 lira is not taking you too far these days. Now, the same case with anybody who saves money. Okay, now this we are talking about, Ersin is talking about just currency, hard currency. And let's say you might want to think, okay, if I deposit it in a certificate. Now look at the certificate of deposit right there on the screen. It says a leading bank offers this special certificate of deposit to its customers. Guaranteed interest and redeemable after any holding period. Now imagine, guaranteed interest of what? Every $5,000 you deposit, you get $20. in a payday. So every payday, let's say every month, if you deposit $5,000, you get $20 in return. So what percentage of interest is that? Let's calculate. Okay. So that will be,
Point four.
sorry, Steve?
0.4.
0.4. Okay. All right. Okay. Would you want to explain how you calculated that?
20 divided by 5,000.
20 divided by 5,000 times 100.
100. Yeah.
All right. So that would be 2,000 divided by 5,000, and that is 0.4 percentage. All right. So at 0.4%. Now, does any of you know what is the rate of inflation in your country?
6%.
6%. Steve says 6%. Okay, all right. Anybody else?
Could be 6% monthly on some months, and generally monthly 1%, and yearly about 20-25%.
All right, Ersin has 20%. Okay, so 20% inflation for Ersin, 6% inflation for Steve. I think most of the countries, 4% would be a minimum. Most of the countries, 4%. This now again, like we discussed earlier, this is market research. You need to keep open to information through different media. You need to be following the news. You need to be following financial information, financial analysis, even if it doesn't make sense to you. Now, this is something that we have to do as an exercise if we have to get better at this stuff. We have to listen to financial analysis being done on TV, on YouTube, in the newspaper. I don't know how many people get newspaper these days, but still, all of the media that happens, collect information, go through information. Eventually, it doesn't have to be immediately. Eventually, it will make sense. It is just like learning a new language. Financial information being shared out in the media is just like learning a new language. Now, I'm taking Spanish lessons with a mobile app called Duolingo, and I can track every single new word that I've learned. I can track every single minute that I've spent on the app. So I know if I'm spending enough or not, or if I'm making progress or not. Likewise, when we start spending time on financial information that is available every day, it will start making sense. It will start making, becoming clear, and we will be able to make our own observations based on what we have collected and what we have stored away. All right, so that's about market research. Now, most countries, they face a minimum of 4%. Now, your certificate of deposit, it is giving you 0.04%. Now, compare if you saved your money in a certificate of deposit, and you are okay at 0.04 and 0.4%. This is happening every month. So 20 by 5,000 times 100. This is 0.04% every month. So in a whole year, you would be 0.4 times 12. That is times 12. That's 4.8%. Now, 4.8% is your return on investment on this certificate of deposit. With a minimum inflation of 4% annually, you would still stand to make 0.8% return on investment in a year. Now,
I
inflation.
need to add something in here
Sure.
because you are getting 0.8% if you are not paying taxes for it, because there's 20% taxes for certificate of deposits return. If you will add that too, you will be losing money.
Big time, huh?
Yes.
All right. I've never deposited in certificates of deposit, so I really have no idea of the taxation on that. Okay. All right. That is very good information. This is the advantage of having a group like this discuss these things. That's one of the best things that can happen. Anyway, okay. Assuming that you are not paying taxes. Now, if you are in Dubai, you are still paying taxes. Because in Dubai, we just have in the last, I think, 4 or 5 years, we've been introduced to value added tax. So if you are earning money, and then you are paying tax on it, definitely. But assuming
the same in my country.
Sorry?
It's the same in my country.
All right. You're from Philippines, right?
No, from Peru. It is in South America.
Peru. Yes. Oh, sorry. Yes, I remember we spoke about it. Yes.
Yeah.
All right. So okay, assuming that there is no tax, and there is an inflation of only 4%. Let's take everything at the best case scenario. There's only 4% tax, 4% inflation, and there is you are getting a return of 0.04% every month, and for a year you are getting 4.8%. Now, even in that situation, imagine, is 0.8% an attractive return for your money? You are investing you are investing $5,000 and you are ending up with $5,000 plus, let's say, what is your final at the end of 1 year at simple interest 1.08 is you will end up with $5,400. Will you? No. 5,000
$24 $240.
$240.
Yes.
All right.
Per year.
Per year, yes. $240 per year.
Oh my God, so low.
Yes. So the question is it significant? Now, for some people, it is perfect because their money is safe, their interest, they are happy with their money being safe with the government, and they are happy with just a minimum or just a very small amount of benefit coming back, a return on investment coming back from it. That is for most people. These are not people who will. Now, this is again considering that everything goes well. Suddenly, now life is about uncertainties, and this is one of the reasons why there's even a book by Kiyosaki. Is it a book or is it a chapter? I don't remember. Savers are losers. I don't know if anyone has come across that. Savers are losers. So this is a very interesting, very interesting read. Yes, Sanchit.
The savers are losers is mentioned in the book Cash Flow Quadrant, and it is included in the top 5 levels of investors.
Right. Okay, so it's been a while since I went back to my Cash Flow Quadrant book. So I only remember the content, not the books. Anyway, good. So savers are losers is a very interesting topic that you should read from the cash flow quadrant, the second book from Robert Kiyosaki. And yeah, there's a recommended list of books that we should keep posting on the this one as well. We will do that very soon on the club. It's been a while since we posted that. All right, so that is the reason why we don't get into small deals. Definitely not get into stocks. Okay, stocks. Ersin, again, would you want to explain about stocks before we pass this this one?
Why not? It's not possible to buy a stock for $1 and sell it for $30 in a few paydays or a few months in real life. So it's 3,000 return in one stock. And if you are able to find that stock, okay, just invest in that. But you are probably going to lose your money. I didn't see anything like that before. And I'm trading stocks for 10 years now. And haven't ever seen that kind of profit from stocks. I don't think anyone can manage it.
Is there anyone else among us who's doing stocks, who has some experience with stocks? Ken, Daniel? I think we lost.
Last time, I think we already touched this topic, and I keep saying the same because I don't fully understand the way as the markets goes up and down. I'm not comfortable to it's too risky for me. I'm not educated for that at the moment.
Yeah, education is definitely very important. But if there's anybody who has been handling stocks, Patrick, have you done anything with stocks?
Yeah, my experience is very, very limited. Like probably about 2 months ago, I started, very similar to the gentleman who was just speaking. I was like, my bankroll's not there. I don't feel comfortable enough to kind of dive in those waters. But I came across some research, mainly on YouTube. I live on YouTube, where they were talking about index funds and how I could potentially own a, small piece of a bunch of large companies, both, here domestically in the US for me, as well as international, and then kind of getting into some of the bonds. So for my research, I kind of learned, again, very limited understanding that if you're going to play for the long term, index are probably the way to go. But I have a buddy who's actually a teacher here in the States, and he's not against index, but he tells me, he goes, I like the hunt of trying to, not game the market necessarily, but he likes to get in, get them low, and then kind of sell them when they're high. And he was telling me just a week ago he made like $10,000, which I'd be curious to know the kind of the inception of that story, how much he started with, and what his actual profits were. But yeah, as far as it goes right now, I just have like a few accounts with Vanguard that I contribute to. Every time I get paid, I just try to allocate a little more money, and then hopefully over time I can increase what I can contribute.
All right. So I think Ersin is the best hand that we have in stocks over here right now. And,
thank you.
I just want to give an example of how weird are the markets for me. I have a friend that his company gave him some options and some stocks, and the company went public, and then the company took some measures, or the strategy changed slightly, and the stock values went all down until minimum values, which were ridiculous at the time. And then suddenly a company show interest in the company, and from nothing, right? And the stocks went up. So nobody could predict that will happen. So it's really not predictable, these kind of things, unless you have some information that others don't have. And I think that it's illegal, right?
It's illegal, but it could be illegal too. If you are running the company, it's legal, but if you are not, it's illegal.
Yeah, yes, it's like I'm not sure. So yes, it's like that. The basic is the offer and the demand and the offer, right? It's the basic principle for the markets, but there are these kind of tweaks that we cannot control and predict. So it's really hard to know what will happen.
Impossible, not hard.
Yes. So that kind of things, it's not clear for me.
I don't know the details of it, but I did see something where Warren Buffett had made this $1 million bet against some hedge fund managers consistently over time, just losing for trying to game the market. So yeah, that makes sense. Nobody's a fortune teller.
Yeah, true. Anyway, all right. So that's okay. We're coming to the end of the second session, and so I think that's it's good information that we have shared around on why we don't do small deals, or why we don't do stocks and certificates in the game. So Roger, you could pass, and then we could move on to the next one. Just keep in mind that we always we do this meeting to learn more about how we can use leverage. And leverage, you need leverage, you need real leverage in doing the big deals, or in making leverage work for you in the big deals, so that you can speed up, you can escalate your journey out of the one. All right, Sanjit is okay. Can you stop screen sharing? Yes. Okay. All right.
Yes.
Sanjit.
Okay.
There's just less than 1 minute, so just let's see. Let's go. Everybody in. And yes, Sanjit is secretary. Wow. In fact, I love the smaller profiles more than the bigger ones. It's easier to play them. Yes, Sanjit,
Okay,
what
let me have a look. Let me
Yes,
have a look
yes.
on my financial statement. I am secretary and have a cash flow of $2,500. It's the least amount in the game. And I have no assets till now, and liabilities are listed here.
The interesting thing to notice here is your payday. Your payday is only 880, which means it is a among all of us, among the 6 of us who are in this game, your payday is the lowest. And look at the home mortgage again. For a salary of 4,500, we had taken a home mortgage of 75,000, a salary of 2,500, which is about half of what the engineer is earning, or the business manager is earning. The home mortgage has also gone down to about half of it. Since in this session, we are comparing all those home mortgages. Home mortgage, again, according to your earning, your home mortgage has gone down. So which means it's also obvious that when we get a higher paying job, we don't become wealthy. We only improve our standard of living. We just move from one location to another location, or from one kind of mortgage to another kind of mortgage. So if our salary doubles, our expenses also double, which means we are not left with much, or we are not doing any better off most of the time. All right. So car loan, credit card, that's okay. Anything missing from the other ones? Anything that you've noticed extra or less? I think not. Everybody is.
Taxes are lower, like
$460.
Taxes are lower. Okay, that could be a possible observation.
more than half.
Let's see, what is mine? Mine is
1,050.
50. Yes, 1,050. So that means here it's 460, again about half.
If you want to increase your payday with paying your retail debt, credit card debts, car loans, and etc., you will end up with taxes and other expenses.
Other expenses, yes.
So in here, taxes and other expenses are lower. So there's more probability to live with lower payday, live with lower salary. This is the difference between two jobs.
Yes. In fact, I think last time we one of those meetings we discussed what are the ways to get rich.
Mm-hmm.
And
it's not paying liabilities, certainly.
Yes. Yes. So hold on, let me bring that book in. I think since we have a lot of new the first timers, I will bring that in, and we will just talk about that for a second.
Okay. While waiting, I can share something with you.
Go ahead, Ersin.
But that starts. Can you stop sharing screen? Okay. While we are talking on the meeting, I have prepared an Excel sheet for what will be happened if we will make this. We did start with engineer salary. I didn't write down the exact salary, but I did write payday and cash expenses we need to pay or not pay. The interest rate of every payday. So I have made calculation based on paying for expenses. In first payday, we get this cash totally, and we pay the retail payment for 1,000. Then our payday increased as 50. To pay all these expenses, pay for all these liabilities, it will end up on 43rd payday. You will have this payday, new payday, but don't have any asset and didn't spend anything to a coffee or anything else. You just paid your liabilities.
You live your life only to pay your liabilities.
Yes. And you end up with this on 43 paydays. Okay.
Right.
After that, I made a calculation about certificate of deposit. So, you did buy every certificate of deposit, and you are able to buy even it's not shown on the game. When you have 5,000, you buy it. I made the same calculation,
Okay.
and on here, the same see
Okay.
what's the difference of paydays. Even if you pay your liabilities, it's better than buying certificate of deposits.
Oh my, oh my.
Jeez.
So I want to show that while you are taking the book, also I have prepared limitless borrowing and 2% rule, but I will explain it later. Just take on from there.
Okay. All right. No, we should do this. We should do this in this same session. Okay. All right.
Okay. Okay.
Quick. I mean, that was amazing. I couldn't have come up with a better explanation myself. I couldn't have thought of a better way to look at it. Wonderful, wonderful, nice.
Thank you.
Right. Okay. So this is the book, Business School. I think it's mirrored. Okay. I don't want to mirror it again and work on those. But it says, Rich Dad, the Business School for people who like helping other people. This is basically a book which was written to promote or support the network marketing industry. But whether you are into network marketing or not, it's not the question here. What is important, what is interesting here is how Robert Kiyosaki says there are other ways of getting rich. Okay, so rather than having financial education, there are other ways of getting rich. And what are the other ways of getting rich? He outlines 11 ways of getting rich. One of it is network marketing. The other is...
One is like marrying a rich partner.
Yes,
Is
yes.
that correct?
Have you been through that book?
Yeah. There are 11. I have read it once.
You have read it once. Okay. So in one of that, he says, you can become rich by being cheap. Which is exactly what it looks like when you start paying off your liabilities in the game. So you can become rich by being cheap. Trying to become rich by being cheap is the most popular way people attempt to become rich.
We have a lot of those in Norway. Those richest guys, they look poor, but they're, especially the guy from IKEA and the Swedish guy as well. He has like the oldest model of the Volvo car, and he doesn't even look like he's the owner of IKEA. It's funny.
True. I mean, I've seen this also in among many of the people in the business community. So if you look at it, it doesn't look like he or she is the owner of the business, but eventually it turns out that they are the owner of the business, and by the way they look. So what he says is, let's say, where is that line? Rich Dad, okay, explaining further, he would then say, people who try to become rich by being cheap are people who often try to live below their means rather than finding ways to expand their means. Which means you are not interested in growth. You are only interested in staying the same way you are and making it better by paying off your liabilities, by living below your means. He also said the problem with being rich by being cheap is that in the end you are still cheap. So you eventually, everything that you save or anything that you miss the opportunity to enjoy.
Enjoy. I think we can't hear you. So
Is there something on your microphone maybe?
Yes.
Because it's making some sound. Please talk. We can't hear you right now.
We can't hear you.
Okay.
Just before your voice was cracked. Now we cannot hear you.
Okay. Can you hear me now?
Oh,
Yes.
it's
Yes.
audible.
It's better.
Okay.
Okay.
All right. Okay. So just the last line. The problem with being rich, becoming rich by being cheap is that in the end you are still cheap. So you miss the opportunity to enjoy your what you have saved for, or what you have everything that you put your effort into. You also need to enjoy the fruit of that, and this is what you miss out when you try to live cheap, when you try to live by paying off all your liabilities and saving your money. Apart from, of course, the dangers of saving money itself, because of inflation, taxes, and all of those kind of things. Right. So, Sanchit, you want to roll, and then we can have a look.
I got a shared opportunity.
Okay.
Just pass that. We don't need to talk it again.
Yeah.
We just talked about it.
Pass. Just pass it. Okay. All right.
Big one, right?
Yes. Go big. Let's see what you've got.
Okay.
All right.
Buy it.
Okay. Don't even think about it. Buy it. Okay. Now, who wants to run through the deal? Okay, let's look at Daniel. Has been through a couple of these sessions, right? Daniel, why don't you
Yes.
try and run through the deal?
Okay, let me try to do that. First, I think this is one of the best deals in the game. And so
Now
I
you
would
have to
say that,
why it is one of the best deals in the game.
yes, why it's one of the best deals in the game. This is, the cost is about 80,000. So it means that you have one unit costs 20,000. Okay, as the market research that we can see in the game, units are sold mostly about for 30, 35. Always saw being sold by 40. So it's really pushing the limit. So it can gives you a nice margin, and you can have a capital gain here. So we can go into the value. So let me check. I think that is 20% of down payment that you have. I'm not sure, but the value I think it is 20%, which is the limit that we can go. It's the 20% of down payment of every business. It's quite nice. The return. Let me do the math.
The return?
It's about 4%, so it's quite nice. 4.6 about that. So it's a really interesting deal. You have 4% of cash flow over your down payment, and you still have you are buying in profit, so you can have capital gains here.
Okay, since you mentioned buying in profit, now you have to explain what does buying in profit mean?
Okay, I will try. Buying in profit, I think it means that you are buying for a good price. It's under the market value, and you can make money by selling it later for a higher price. So I think it's mostly that. Maybe you can add something on it.
Okay, that's simple enough to discuss. but I just want to add. Okay, first of all, wonderful explanation, Daniel. I think you've covered all the points except the point of the description of the deal. Do you want to try and do that as well?
Okay, let's do it. So it's 4 plaques available. A forced sale, out of state, financially distressed owner, years behind on taxes, some records available. So it means it's the owner is broke, I think. So it's a really urgent sale. So maybe the price is that because of that situation of the owner. So we have a little pressure here from the owner to sell it quickly. It's like finding problems.
Right.
I remember on Cash Flow Quadrant book, Robert Kiyosaki, maybe at the end, is saying that he passed from lots of stages on his path. The first stage was looking for problems like this one, which is looking for this kind of problems so we could take advantage of it. So.
Correct. All right. Well done. Good job.
Thanks.
All right. It's really nice to see. One of my aims of spending all this time over here. It's not just my effort, of course, but then one of the reasons why I spend all this time over here is because now I have the time and I can make the investment. Now, eventually, I would love to have this meeting go on, even when it comes to a stage where I'm suddenly stuck somewhere and I'm not able to join this meeting, but somebody else is willing to host it and willing to go ahead, move this forward. So I don't want since we have started a very good movement, and today's session is actually a great example of how it can grow. So I would love to see this grow, and I would love to see everyone be able to come out with the same or even better ability to observe, ability to describe, ability to calculate, ability to analyze, ability to understand, and ability to explain all these things that we are learning over here, or all these things. So it can be passed on. The only way it can move forward is when we grow. And this is also one of the things that Kiyosaki says. If you want to grow, you cannot do it alone. And there is again, in one of his books, there is a portion which talks about stakeholders. So every business, every venture that you get into, every action that you take has to satisfy or has to take care of its stakeholders. And I don't remember that portion exactly. I still have to go back and look at it and see who are all the stakeholders. But he mentions 3 of them. And we, as people who spend time over here, are only one of those stakeholders. So there are 2 more stakeholders. I will definitely look it up. I will definitely check on where he talks about all this stakeholder thing. But there are other stakeholders who are not here today, and the only way that we can make sure that we are sharing this value with them is that for us to grow, is for us to become stronger in such a way that we can, today if we follow, tomorrow we should lead. This is the only way we can make sure that that value is transferred. And that's one of the reasons why I would that's one of my ambitions, or one of my dreams of this whole meeting or the club as such. Anyway, that's a little bit personal there, but let me just summarize what Daniel has just said. Mainly to just put it in order sequentially. And that would be, let's look at the description of the deal. It says fourplex is available, forced sale. Now a forced sale, if you look at today's market, you will see a lot of forced sales. You would see a lot of distressed sales. And this is where the owner is not looking for a capital gain. The current owner just wants to exit the deal. He just wants to be able to handle his mortgage. He just wants to be able to pay off the bank, take the liability off himself and run. So he says, out of state, financially distressed owner. Out of state, he is probably in hiding. So he probably can't come into the state itself, or probably he has other other businesses or other ventures in a similar state which need his attention, and he has to spend time over there. So he just wants to get this done with, or he has other ventures which are more profitable or more beneficial, but he needs capital injection into it. He needs cash injection into it, and he wants to generate that cash from the sale of this particular asset, which is probably why he is asking for the market maximum of down payment, which is 20%. If you did not need that much cash, then you would probably be willing to make some adjustments. You would probably be willing to negotiate on your down payment, on your percentage of down payment, and maybe even come down to up to 10%. So that we do have deals of that sort, where your down payment is only 10%. Typically in India, our down payment is around 5%. So I've been handling a few real estate property deals recently, and your down payment is about 5%. So it could go down, but the highest it could go. That being said, even in the game, we have a deal which asks for 25%. It is also a good deal. When we come across it, we will discuss that. Right? It is also a good deal, even if you pay 25% down payment, because of how well in profit you can buy the property. Anyway, that's financially distressed owner. Now there could be different reasons for financial distress, and that is what we just discussed. And years behind on tax, so which means he is in trouble. He is in legal trouble already, and he has no other option. So he is in trouble. So some records available, which means if it says some records available, now this is something that we need to look at carefully, because as the new owner, you could face trouble with the legal records that you're holding, because not all records are available. If you get into a situation where not all records are available, now you are expecting some amount of trouble. You are expecting some amount of effort, some amount of time that you have to invest in sorting out the legal papers, the legal ownership, and the tax papers of this property. So this is one of the reasons why, one of the advantages you have when you would want to negotiate the cost of the property. And probably this is one of those, that is the reason why this property is so low on cost. If you look at it, fourplex, which means that's 4 units going at a total of 80,000. That means each unit is going to cost you $20,000 per unit. So each unit in the fourplex is costing you 20,000 units. And that is where your market research comes in and says it cannot go below 20,000. So if you purchase this property, you cannot lose money on it, which means 20,000 can be considered the cost of the property, not the valuation. Now, there is a difference between the cost and valuation. I still remember the first meeting that we had, Ersin, when you fixed me with that, and unfortunately we don't have a record of that. We didn't start recording those meetings then, but that was, so 20,000 is the cost of the property, and 20,000 is also the current valuation. The valuation keeps shifting, but the cost, it has to stay the same. So the point is, when the valuation is closest to the cost, that is when you have a profit in buying it. So you will find many other instances where the valuation is not the same as the cost, but you will, it is also true that as the valuation moves away from the cost, that is when you start losing profit, or when the valuation and the cost are the same, you have maximum profit. That is when you have maximized profit. Now, how will you know if it is a cost? That will come out from your market research. Now, down payment is 20%, as we discussed already. Cost is 20,000, which is, or rather, what you see as cost in the game card is actually the current valuation. So the current valuation is 80,000, which also happens to be the cost. So that means when you buy closest to the cost, you are buying in profit. When you move your valuation away from the cost, you are losing profit. All right. That's just what we summarized, and that was the last the last 10 minutes of the game. I think everybody had one round. Sanchit, you can go ahead and buy, and then Ersin, can we go back to your okay, next time I mean, we can also discuss on how the cash flow and the financial statement, the payday, and the deal and the payday are getting connected. Oh, all right. Ersin is not able to hear everything that is being said. Okay, all right. Okay. Ersin is still here. Okay. All right. Okay, last 10 minutes, and then, okay, if Ersin can't share the Excel now, then Ersin, is it possible for you to do that? Can you hear us now? Can you do the, I think he is stuck. Okay, I think he will not be able to do that. Let's move on with the screen sharing then. Whose turn is it now?
It's Steve's black turn.
Steve, okay, so we get to okay.
Matthew?
Yes.
Yeah, I have a question about the previous game,
okay.
about the previous turn. What about the monthly payment of this
okay, that's precisely what we did not discuss. And okay, let's all right, okay. Okay, that was Sanchit's turn, right? So
yeah,
that was my turn.
yeah, can you share that screen? Let's discuss that as well. Can you share your financial statement? Okay, not Steve. Steve, can you close the stop the sharing? Let
Sure.
okay. Let me stop. And Sanchit, can you share your screen, your financial statement?
Yeah, sure.
Okay. All right. So zoom in a little bit if you can.
Yes.
All right. Okay, financial statement. All right. So look at what additional expenses have been added. Earlier, before I did the deal, okay, he has taken a loan of 16,000. Okay, so which means his cash was zero. Okay, all right. Bye, Daniel. See you. Daniel is saying goodbye. I think we have almost come to the end of the sessions also. Okay, so he had zero cash, or cash that you can use is only multiples of 1,000, which means he did not have $1,000 in his cash, which means he had to take a loan of 16,000 to make the down payment. Now the loan of 16,000 for the down payment, ideally you would make this money from, okay, Ken is in the waiting room. Ideally you would make this money from capital gains so that you can invest. You are expected to invest your own cash. Now if you are unable to invest that cash, because that's your cash of 16,000 plus a mortgage of 16,000 and your mortgage of 80,000 minus 16,000, that's 64,000. So 64,000 in mortgage and 16,000 in cash. This is how the deal is structured. So which means you have a cash flow of 750. Can you scroll up just a little bit, one line, Sanjit?
Liabilities one.
So we can see the income from the Plex. All right, that's good. That's good. Yes. Okay. So your income is 750. Your cash flow is coming after your mortgage payment, but after 16,000 of your own cash. 16,000 of your own cash you did not have, which means you borrowed from somewhere, probably the bank. Now, another thing to remember is that you don't always have to borrow from the bank. You can also borrow from friends and family and all of that, or you can borrow from money lenders. There are a lot of different options to borrow money from. So that is one of the reasons why the game has unlimited borrowing, because you can always find different ways of borrowing money. Now, we will not go into that right now, but you borrow money, let's assume, from the bank at 10% interest. Now, we have to calculate this 10% interest apart from the mortgage. So after all the mortgage, you get 750 from your property, and that 750 from the property is coming in as your passive income. Now you already had a passive income, or you already had a payday of 880, I believe. Yes, 880. So 880, and then you borrowed 16,000. Now 16,000, when you borrowed at a rate of 10%, which means you have to pay back every month 1,600, 1,600. So 880 and your 750 together represent your monthly payday. Now, if you get this deal, your monthly payday is represented by 880 plus your additional passive income of 750. So that will make it 1630. If you add it together, you will get a payday of 1630. Now, out of the payday, you are adding a new expense. Now, that new expense is 1,600. You already have a payday of 1630, and you are adding an expense of 1600, which means you are left with a payday of $30 only. Now, I know you have a problem with your payday going down. Isn't the payday supposed to go up, not down?
It's only $30.
Yes. Roger?
Yes,
Isn't
yes, I'm here.
it?
Yeah.
Right? This is what you're
Yeah.
thinking. All right.
Yes.
So when you start your investment, you have two ways of making money. One is you have to increase your passive income. That is the whole point of the game. If you take your financial statement and you look at it, you see increase your passive income and get out of the rat race. But there is also another component, which means you have to make capital gains. Now, what is capital gains? You buy something low, you sell something high, and then the difference that you make between your low buying price and your high selling price is your capital gains, in very simple terms. Why do you need these capital gains? You need these capital gains so that you can actually use this capital gains as investment against your cash flow assets. Now, cash flow assets are something that will help you move from rat race to fast track. If you want to invest in cash flow assets, you have to first make capital gains. So you have to do two kinds of deals. One is you have to do your cash flow deals. The other, most important, in the first half of the game, you have to do your capital gains investment as well. This is one of those capital gains investment that we have made. That is the end of this week's meeting. Thank you everyone for joining us. It was a real pleasure. It was a real nice time to be with so many people.